Welcome back to the Wyckoff Crypto discussion. In the last month, we have received many submissions, questions about Wyckoff methodology, about Bitcoin, and so on. And today's session is totally devoted to your questions. As usual, this information is for educational purpose and is not an investment recommendation, so please stop the video and read the disclaimer. The first question from Paul: which screener do you use for crypto assets? Well, the crypto market is still quite small, so generally I focus on the most liquid assets and I create several watch lists in TradingView. In that way, it takes me just a minute to quickly go through dozens and dozens of structures. That said, I want to suggest here a very simplistic tool. Let's say that you are a swing trader, so you have to jump from one cryptocurrency to another. A screener is always a great tool. And TradingView has a very advanced engine where you can play with many parameters, volatility, volume, and so on. But especially for beginners, I would recommend another tool, which is totally free. Its name is BitScreener. It's very simplistic, and as you can see, you have just few filters, but in a couple of minutes, you can go through dozens and dozens of structures. So even with this very basic engine, you can do a lot. For example, here you see two parameters, performance 1 and performance 2. For example, 1 month above 30%, 1 week above 0. Just playing with these two simple values, you can look for specific structures. And this is a very simplistic tool, guys. In the stock market, we have more sophisticated engines, screeners, and scans. And at Wyckoff Analytics, we are so lucky to have John on our team. John is a great contributor to our community, and each week he presents very advanced scanning techniques, and his work is just outstanding. The crypto market is still small, and I think that a simple tool like this can be very, very helpful. And I love the fact that especially beginners can educate their eye to the structure of the market, just looking at these charts. So feel free to email us your favorite platform, screeners, and so on. Any other suggestion is more than welcome. So your remarks on this platform, on the stock market, for example, Roman.
So I think it's a very useful approach as to how you do your process, right? Because you have a trading plan and you have the process, how you execute everything on your trading plan and how you go about your trading. So I do use a lot any type of, filtering software specifically for stock market. I use FinViz, I use stock charts. Those are very useful. You don't even have to create the scan to do this. They're called kind of built-in. So you see the built-in functionalities here, and you could start thinking about, like, for instance, what do I want to see? What am I looking for? I'm looking for something that is outperforming, or maybe you could construct some outperformance where you have, for instance, in the last so October, November, December, in the last, let's say, 3 months, I want to see outperformance by, let's say, 100%. So this would give you the structure of a trend, and this would give you the structure of some kind of outperformance as an asset. And then let's say under the performance 2 field, you could say that in the last week or so, or maybe in the last 2 weeks, I have it under 0% or under, let's say, minus 20%. So what are we trying to achieve here? We're trying to find a long-term leadership that is established already, the characteristics of the leadership, and then we want to look for the short-term weakness in that leadership as a temporary event, and there we want obviously to take a position. So there are quite a few ways of using the filters, and I think just the fact that you could do this with the cryptos is just very, very great and significant.
So next question by Max94. Is this volume spike demand or supply? These spikes are so tricky. So this is a basic but important question. Every time you see such an increase of volume, you have to be sure that the supply that has emerged will be absorbed. So action test. So what the first test that we have seen here is very constructive, and I think that if we stay here and we digest the supply that has emerged on this bar, Ripple could be very interesting in the future. But it's very important to see signs of absorption and after that a confirmation. This is not my favorite chart. Generally, I prefer instruments that show a more consistent presence of institutions on the tape. What do we see here? We see a lot of inactivity throughout the formation, and then finally buyers are rushing into the asset, which is very common, by the way, in the crypto world. This chart reminds me of a very liquid stocks that all of a sudden get the attention of institutional traders. If institutions realize that this asset is too liquid, they can dump it right away. If instead more and more traders jump on the bandwagon, we can see absorption on the way up, and that could be very, very interesting. So your thoughts, Roman, on this chart?
Well, let's go to the original question. Is this a demand or is this a supply? Well, the easiest answer is going to be both right away. I think that the question here is more about whether demand is more in control or supply is more in control. I would ask it that way rather than is there a demand or supply here, because you're always going to have a demand and supply. And on this volume spikes, I mean, the volume equations that we study or that we create at Wyckoff Analytics, this is going to look like this. Volume spike increase is going to suggest that demand is there, demand is expanding, and that's what moves the price up. So demand is in control on the move up, but supply is increasing as well. Why would supply increase at this spot? Well, it's a very natural spot of the resistance. That's number one. Secondly, when there is a lot of participation, as Alessio has mentioned, that's going to introduce a lot of mean reversion trades into that demand. And if demand cannot push the price through a specific resistance area, that would suggest that at least temporarily supply is going to be in control and we're going to have some kind of reaction. So it's that test that we're looking for right now to see whether we could hold here, consolidate, and then go through the resistance level. Going through the resistance level would be the most beneficial thing to do, in terms of the bullish scenario. But we still have to see how it's going to go. And usually whenever you have those big volume spikes, especially in the somewhat illiquid assets, that requires some time, to test. That could also produce a more meaningful reaction. So again, do we have demand and supply? Both. What is dominating right now? At least for now, we're seeing that demand is dominating, but short-term supply is there, and we need to go through the tests.
Great. So next question, Deslo. What do you think about the crypto cap indexes available on TradingView? Well, the index that you see on the top is just a calculation. The volume signature that you see here is updated only every 24 hours, while the bottom chart is a totally different story. This is a real basket of cryptocurrency offered by FTX, and this is actually tradable. The volume signature that you see here is not a calculation. This is a real tape. We are talking about futures that are used by crypto funds. And in my experience, these charts, especially for swing and intraday traders, are very, very accurate. So if you live outside the US, you can trade these futures, or you can just use them to understand what's going on in the market and then trade other assets and cash positions. So just look for alt perp, mid perp, shit perp, DeFi perp on TradingView. And I think that this crypto futures should always be the starting point of your market analysis. And this is what we do here. Okay, so next slide, Roman. A very interesting question by Juan. Sometimes different exchanges have slightly different data. How do you choose the best volume data? Well, many years ago, you could find big difference in the volume signature between one exchange and another. And this was apparently a big problem for tape readers. Today, the volume signature on the main exchanges is almost the same. So you can study the price action of big exchanges like Binance, for example, and you will rarely find a significant difference in the data. And even when you find a minor discrepancy on a 5-minute bar, that's not a big issue. Today, I think this is not an excuse to not trade these instruments. And at Wyckoff Analytics, we are very serious about volume. If you are a purist, I can recommend you this platform, Messari. The basic account is free, and they use a volume aggregator. So the volume data that you can see here is beautiful. It's definitely organic, and is actually used by many crypto fans that want just to double check their data. That said, I think that this market is way more liquid than just a few years ago, and 90% of the cases, if you just follow the tape of big exchanges like Binance, Kraken, BitMEX, they look very, very similar. So volume data is crucial. Still today, you can see some discrepancies, but please do not use this as an excuse to not analyze and trade these instruments. And I hope that this Wyckoff crypto discussion is helping you to analyze the market in a very systematic way. So, and this is a very fascinating question from Mary. So, in the crypto market, we have both spot trading and derivative market. What market should we follow for tape reading? So, the cash market is still very important for the altcoin small cap market, even though you can trade this asset with a lot of leverage, especially outside the US. The derivative market is very important for the price discovery of Bitcoin. And there are two kinds of derivative market. The offshore derivative market, BitMEX, Deribit, and so on, and then the CME future market. When the CME future market were introduced, the volume was very, very low, was ridiculous. Few contracts were traded there. Tape reading based on that volume data was not the best idea. But today, more and more institutional money is coming to the system, and basically the CME futures have almost the same liquidity available on the offshore platforms. That said, the offshore market is still dominant. And I think that that is the tape that you should follow, at least for the next 2 years. And maybe that at the end of this Bitcoin cycle, we will see some change of behavior in the institutional participants, but we still have to see. Crypto trading firms operate on multiple exchanges on the same time. So basically what they do, they split their orders on several exchanges according to the condition of liquidity that they see on an exchange. And the derivative market is way more liquid in general than the spot market. So that is the tape that you should follow when you want to trade, for example, Bitcoin on the intraday. And there are exceptional conditions, however, where the spot market is still very important. Of course, we are talking about very dramatic liquidity event. And here we see an extreme case study. We discussed this in March in our crypto report. This was the COVID crash. It was one of the most extreme liquidity events of the last decades. So this was true for the stock market and for the crypto market as well. So what do you see here? Why these two volume data are so different? This is not a normal situation. Generally, they look almost identical. So what's happening here? The derivative platforms are extremely important for crypto miners. Like in the gold industry, crypto miners use derivative instruments to hedge. Hedging is crucial for them because they have a lot of Bitcoin in their balance sheet. So what was happening on that day? Generally, since the portfolio miners is as a lot of Bitcoin, other major cryptocurrencies, stocks, other instruments, crypto were not initially affected by the COVID crash, probably because this industry was a classic example of a stay-at-home economy. But crypto exchanges and other blockchain hub, as you know, have been working since in the last 10 years from home. But when the stock market was crashing, miners were forced to sell their Bitcoin reserves. First sell what you want and then sell what you can. And this is a very, very important concept. So in normal condition, that selling is not a big issue. There are other buyers that are happy to see panic selling. But the market conditions in March were very peculiar. So the market book on the derivative exchange was extremely thin. So very important historical lack of liquidity. So this is an extreme case study, and we see that the volume data is totally different. Miners were dumping their Bitcoin on the future market, on the unregulated future market, and because of that, trading was halted, and that acted as a circuit breaker for this unregulated market. It's totally crazy, but if you remember in March, in the stock market, there were circuit breakers that were activated by the excess of volatility, and in this unregulated market, this was like a manual thing. So trading was halted on the perpetual futures, and look at the volume that was coming in on the spot exchanges. This was the chart of the bottom of the market that we have published on March, and I think it's a very fascinating case study. But in normal conditions, the crypto market does not behave in this way. So this is very, very extreme case study. And that's it for today. So Roman, your remarks on this chart.
Well, I'm not going to add anything to this, Alessio. I'm done here with just your discussions. That was fantastic. So thank you so much for walking us through this. I must say that Alessio definitely has become such an expert on cryptocurrencies in general, you know, what to trade, how to trade it, how it's being traded, what's the methodology behind the trading itself. So this is just kind of like being shown here in this segment. And I'm only adding value here on the charts that we look. But with that, we are in the holiday season, so we want to wish you guys all the best in the new year. And just, you know, spending time with your families during the holidays and learning about the cryptos and Wyckoff. So we love that. And we'll see you in the next episode. Thank you, Alessio.
Thank you, Roman. Have a great holiday season.